Okay. Perfect. Oh, that would be okay. Perfect. Thanks.
Everyone to our last AFO-BMG meeting of 2019. I cannot believe we are here at the end of December. I hope you're all getting your units squared away with end of term kind of things. I'm happy to report that we are completing some of the audit process. There are still some to go, but things are wrapping up for the year a little bit. Couple of announcements today. I should announce that I'm Gloria Keeley. Also, we have some important policy updates. I'm not going to steal Scott Zalatoris' thunder. I may make a comment or two after he talks to us about it, but really pay attention to the policy updates today. I also wanted to thank people for their comments on the business meals. We had some great comments, and many of them were positive in terms of the changes that are happening there. And again, I will let Scott tell you details. On the Source to Pay project, big news there as well. I am so glad to announce that today is the day that we are going to sign a contract with Jagger publicly. And that's really very exciting. The contract terms were very favorable for us. Our negotiation team did a lot of hard work, and I think we will expect to see iBuy around for at least 6 more years, but with improvements. Also, the replacement of ICS. And I want to thank those of you who participated in the focus groups on the TEM portion of the Source to Pay project. We are about ready to make some decisions around who to invite to campus to do demos, and so be looking for that in the start of the new year. I came to you several months ago with some of the changes that have been happening in the CFO office. I think after much hand-wringing and anxiety, I finally have a title. So my title, I believe, going forward is going to be the AVP for Business Services. Does that mean I'm doing anything differently? Not so much. What it means is that USFSCO will report to me, government costing reports to me, the contracting offices who work with you on contracts that are instances where we provide services to others, and our University Engagement Office, the former CBO office. Business services makes sense to me in that what I hope you will know is that it is still absolutely safe and appropriate for you to reach out to Dana and Bernadette and myself anytime you have a business-related issue that either needs to be escalated or a problem to solve. We are your people. Come to us whenever you feel the need. In that vein, we are doing preparations for the BAT conference. Today it's just a mark your calendar. Once again, reminder for March 31st, 2020. And more on that in January around program, but it's coming together very nicely. Also, I want to congratulate people on the one of our 3 audits is wrapping up right now, and it looks like we are having improved fewer findings this year than we had in the past, so that's always good. We are on a trajectory that looks great. I appreciate that, and thank you all for your help and hard work in your units. The 2 major findings that plague us continuously are P-card, inappropriate activities with the P-card. Oh, I've just done something. And don't touch the computer. Inappropriate activities with the P-card, especially be alert for stringing instances, because those are the more egregious ones. I'm going to say they're not simple errors. They're instances where someone is intentionally trying to game the system. I'll just be plain language about that. So please be mindful of that, because it's going to be under heavy scrutiny. And the other thing is the perennial year-end accrual deferral situation, getting the transactions booked in the correct accounting period. So again, as we continue to try and improve automated processes, also be very mindful of that as you're nearing year-end. More reminders will come, since this is calendar year-end and not fiscal year-end. Okay, that said, I think we're ready to go into the formal portion. So Scott Zalatoris will come up and talk to us about those important policy updates.
You know, Bill, we could switch if you want to do. Let's see here. I've got it. All right. Good afternoon, everyone. My name is Scott Zalatoris. On behalf of the CFO and the Policy Office, I bring you tidings of great policy updates in this festive season. So let us begin. I'll give a quick update on upcoming policy changes, of which there are many, and then we'll have a chance to ask any questions you might have. I'll always keep this in here as a reminder. I do publish all the updates to the manual at that URL. Please sign up for the Business and Finance News Service, and please download new forms every time you process a transaction. Upcoming policy changes. The first is employee relocation assistance. Communications went out last week in the Finance News, in the DDDH. They should have gone out through the HR communication line, so you should be aware on January 1st, the relocation assistance policies are changing. What does this mean? Among other things, we are expanding the options. You can choose to process either a one-time payment to the new employee through payroll, or offer a combination of reimbursement for expenses incurred and the option to pay directly to a contracted moving vendor, currently Federal Movers. So right now is an either-or situation. There are additional changes like the cap to $15,000. That's been increased. If you do choose the reimbursement option, the allowable expense type has been removed. That list is gone. It is for expenses incurred. So the communication has more details. It has a link to the policy right now, is a Word document. When this goes live, we'll update it in the manual, but we can't have two versions right now. So please see the communication for a summary. Please see it for the full text. It's important to note the option that you're choosing, which form of the relocation assistance, and the total dollar amount must be in the offer letter, in the signed offer letter. That has to be identified. That's huge. It's important because when we go to process these, payroll needs to know if you've chosen the direct payment option, and the payables and purchasing folks need to know if you've chosen that option. So right now we're requiring people to document that and the total dollar amount. So the policy is being published on the 1st. Please see the communication for details. Please check your emails. Please make sure whatever offer letter you use, that language is updated accordingly. So I said questions at the end, but this is a big one. Are there any questions right now? Okay. The second change coming in January is Section 13. So thank you to everybody who participated in the open comment period. What we did present was an updated version of Section 13. The policies are not changing, but what is changing is the presentation of the information. So we're focusing on the policies, the crucial accounting policies that need to be implemented in your operations. We're focusing on the procedures for information you need to know to properly execute those principles, and we're re-emphasizing the robust training environment that we have here, and that's where you learn the process-specific information. So nothing's changing in terms of requirements, policy-wise, but where the information is presented is changing. So this will roll out in January. Will be communicated. Section 13 will look differently. If you have hyperlinks to things, some of those may break, so check them on when this one's communicated. The content will be there. It may be in a different place, but we think this is really going to help people understand what's a policy and what's a process for how you do your job. Are there any questions about that one? Okay. Business meals. All right. This change is tentatively scheduled for January 2020 as well. It looks very similar to what was presented in the open comment period. So we're still focusing the allowability, based on the allowability of expenditures on the bona fide business purpose. That policy is in 18.5. That's our tax policy. We'll link to it in this policy. Payables has a job aid describing what a good business purpose looks like, but the policy is shifted away from the allowable situation-specific criteria to if you can articulate a bona fide business purpose as described in our policy, which is based on the IRS, it's an allowable expense, so say the system office. It's important to note that your unit may have different internal restrictions, and that's up to you. But from the system office perspective, bona fide business purpose. The person per meal limit right now is at $75, like was proposed. Still as proposed, removing the names, requiring the names of the individuals who attended. The 1 or 2 stipulations for supporting documentation, you will need to provide the total number of attendees, and you will need to indicate if they're employees or non-employees. One thing that came up in the open comment period, the question of students. So for the purpose of this policy, students are treated as employees or non-employees depending on why they're at the event. If it's an office function, it's a unit function, an administrative function, and students are attending because they're a graduate student worker, it's probably appropriate to classify them as an employee. If you're an academic unit that's doing something with a faculty member bringing in a guest speaker, and they're attending as part of their coursework or something like that, it's probably appropriate to label them as a non-employee. But the student-specific classification is gone. So as it was laid out in the open comment period, the policy is very, very similar with a few minor clarifications. That's still in the final review phase, so I'm saying as proposed because it's still pending a final administrative review. Barring any changes, this will go out in January of 2020. You will see it communicated, and we'll roll through that process as well. Are there any questions on that one? Yes?
Some kind of standard listing of what's considered a bona fide business purpose, because I think that definition would be very broad amongst many people.
Sure. So there will be the official policy definition in 18.5, and we have now is there's a lengthy 2 or 3 page document, a job aid, that goes through what makes up a bona fide business purpose, the who, what, where, when, why, that was created and promulgated by Payables with the idea that this is what they're looking for. So that is currently available, but not widely known. I'm going to have it on the policy itself. So the expectation is, if you meet the legal definition, if you've got the information, and it's supposed to not only be the business purpose box, it's supposed to be the totality of the submission is what the bona fide business purpose is being judged on. Having said that, I would make sure the box is really, really clear. Make sure that the information, my suggestion, that's in the job aid is there. We've talked a lot about it. It's a robust set of details, set of expectations in that job aid, and this is a big shift. So we'll count on you all. If something's not working right, we'll need to react to it. And please tell us, because it's a big change. But that job aid is robust. If you need a link to it, please email me directly, because it has been out there, but I'm coming to realize it's not widely known. So hopefully that's a good starting point. I think it should be. I'm pretty comfortable with that. Any other questions? Yes?
Does the $75 per person limit include tax and tip?
No. 75. Sorry. The question is, does the $75 per person per meal limit include tax and tip? It does not. So it's just the dollar amount for the food, the beverage, the alcohol. It's all one number. Tax, tip, fees, any ancillary, that's all, it's not included in the $75. Any other questions? Yes? Okay, so the question was, does the business meal policy expand or extend to somebody on travel status who would otherwise be receiving a per diem if they have a business meal, and how does that work with the per diem? It's complicated, which you already know, but the idea is, again, if you have a bona fide business purpose, business meal expense, it's that employee's business meal that they're expending. It's their meal. Then it's potentially allowable, and I'm saying potentially because it's up to this specific set of circumstances, to reimburse for a business meal, if it is indeed a bona fide business meal, as described by this policy, and reduce the per diem by the amount of the meal. That's all possible. It's in policy. I'm uncomfortable saying it's always going to be allowed because of all the details required in adjudication, and I don't really want to speak for Mr. Martini and payables. But that intention has not changed. I hope that with the broader focus on bona fide business purpose, there's less of a need. I think right now one of the challenges is we don't know if it's bona fide or we don't know if it's circumstance specific for why rejections are happening. This takes circumstance specific off the table. So that's still in there, but how it's described in the expense report, if payables sees that bona fide business purpose, if it's clear what the meal was for, the per diem is completely different. That's prescribed by state law. We get a lot of, we can't change that. That's one we cannot change. We can't go to the federal, we can't do anything. That's the state law. So, but this is not meant to circumvent that. I know that wasn't the implication, but that's sometimes one of the things that goes into the equation. So I'm sorry I'm not giving you a satisfying answer, but I'm trying to address as much as I can. Hopefully that's something. Are there any other questions? Yes, sir.
The department responsible for checking if there is somebody like that, like there's a conflict included, but they are blaming FDA for use.
I'm sorry, is the department responsible for checking if somebody's
The means like included as part of the conflict that they are not included, but they claim that means.
So the question is the department responsible for checking if a conference included meals when you're submitting the expense report for subtracting the per diem?
Yes.
The person submitting the expense report is certifying it's true and accurate, and the person approving it is doing the same. So those people, however it's set up in your department, are responsible. The submitter and the approver, you're saying that this is true and accurate. The conference brochure should most likely be attached to the expense report, and oftentimes it's in there. If they're claiming, if there's a question, it's always better to provide more information to payables than less. But the expectation when you submit an expense report is you're certifying it's true and accurate, so it should be the submitter and the approver. Any other questions? After it goes live, I'm not taking questions. No, kidding. All right. And the last one, effective March 1st, to be communicated imminently. We are making a slight change to the premium transportation accommodation policy, also known as if you have a work-related accommodation, you can fly in a premium class of airfare or other form of transportation. What's changing about this is not that you can or can't do it, that you still can. What's changing is who's approving the request. Beginning March 1st, and this will be communicated, persons wanting an accommodation to fly in a premium class of airfare or other transportation option will need to submit that request to the EEO office of the university. In Chicago, it's the Office of Access and Equity. They will review the request, and they will approve or deny the request. They'll issue you a letter, or that employee a letter, stating it's been approved and potentially the duration of the accommodation. That letter will then need to be attached to the expense report showing the premium class of airfare. So don't attach doctor's notes, don't attach medical records to expense reports. That's all going away. Everything has to go through OAE for approval. Why March 1st? Because it's going to require people to get this approval. So we're going to communicate it in the next day or two, and that then gives people 3 months to seek through OAE that review and approval, because that letter is what payables will use to approve or deny the expense report. So this should be done prior to the purchase, prior to the process, prior to everything. This is the new standard beginning March 1st. This will be communicated. It's standard across the board at the system, but in Chicago, OAE will be the Office of Access and Equity. that does the processing for this and does the approval and supplies the letter. Are there any questions about that one? You know, January is usually the wind down time, but for me, it's the busiest time of year every year. Okay. Are there any other questions? Okay. Please feel free to contact me if you think of anything, and I will be back in January unless I'm sensing that the rollout isn't going well, and then I'll, you know. Thank you so much.
Thanks, Scott. I do want to make the offer that I made to you before. Keep us posted on challenges as these big policy changes are occurring so that we can respond appropriately. And certainly you can do that through all of the normal channels, questions to UPay, reaching out to Brent Rasmus, to my office, whatever is most expeditious for you. Next up is John LaRoe to talk to us about accounting for revenue generating events.
Thank you, Gloria. And before I get started, I just want to give special thanks to Scott as well. Just selfishly speaking, I worked really closely with Scott on the Section 13 updates that were coming out in January, and we're really excited for that. It's going to be a lot more user-friendly, we feel, a lot more clear. Like Scott was saying, it's going to have the policy statement in there, how to follow the policy, the reason for why we have the policy in place. We get that question a lot of times, like, why are you so tough on us on this, or why are you making us do it that way? You know, so a lot of that, more of that's going to be in there too. So we really are excited about that. So for those of you that took the time to look through the open comment period and comment on that, we definitely do appreciate it. So I wanted to come to this month and talk to you about accounting for revenue generating events and how that works. Whoops. First off, we'll just go over an overview of the applicable policy that's out there on this topic. Walk you through the steps necessary to properly account for these different types of revenue generated events, and then see if there's any questions after the fact. So to kick off, once again, Section 13, as we just discussed, which is the accounting area of policy. This is a somewhat new policy within the last couple of years or so, I'd say, that we put out there to give proper guidance on this topic because we saw so many problems in this area, and so many units that were not really properly accounting for these different types of events. So we wanted to get some documentation out there to kind of help better walk you through what to do to make sure you're in line with the different procedures for this. And this policy really applies to any kind of revenue generating event you may have. Here's some examples up here, but it's not just limited to these examples, but things such as workshops, conferences, banquets, fundraising dinners, student programming events, any of those sorts of things. Basically anything where you're bringing money in the door to charge an attendee to come to that event. That's what we're talking about here. So the policy does talk about the difference between both university revenue generating events and external revenue generating events, and we'll get more into this here a little bit in the presentation, but really that's a core aspect of this policy and something that's really important to remember when you're looking at these different types of events taking place, because it really does drive the accounting and how you account for things. So, for example, if it's a university event, a university revenue generated event that we're sponsoring, that we as a university are covering and putting on, you know, things are handled one way, as opposed to something where maybe it's just a simple rotating type of conference or event that takes place, you know, from one place to one year to the next, and maybe go to a different university, and we're just simply the host for this current year, and then next year is going to go to the University of Wisconsin or somewhere of that nature. So it really is important to determine what kind of event is it before we proceed. And then, you know, once again, based on the various types of funding sources that you have coming into those, you know, registration fees, any donations that come in, any advertising revenue or sponsorships that come in for these different types of events, depending on what kind of event it is, it really does make a difference on how you account for those. So once again, once you determine what kind of event it is that you have on hand, this policy helps walk you through a 5-step process to really get you to the final solution on how you need to handle it. So we'll go through those 5 steps. I'll try to do it fairly quickly for you, but just so you have it documented when you get back to your desk too, here are the 5 different steps that the policy tries to walk you through. So the first step is, first off, let's figure out, see if this event is related to a sponsored project or a grant first. And if not, then you need to determine, once again, if it's a university event or an external event that we're simply hosting. And then third, once that's determined, you need to ensure that the revenues and expenses are properly recorded, depending on what type of event it is. And then once the event's completed, you need to have the proper closeout. And then contact us here in UAFR if you have any questions. So we'll go into more steps and more details on each one of these steps here on the next few slides. So the first step is the event related to a sponsored project or something that should be recorded in a grant fund? And some people get a little confused when we bring this up and don't really understand what we mean. But some of you who are familiar with grant funds and sponsored projects, what you may see is that I'm just making an example up here, but maybe the grant has a requirement in there that says, okay, you need to do research on topic XYZ, and then you need to have some kind of a conference to communicate those results or to bring in the experts from those different fields and disseminate that information to the public. So if that revenue generating event is a required part of the grant or the sponsored project, then those sorts of receipts for the attendees, who pay to come to those events actually need to be handled within the grant fund itself. And I think it's as program income. And there's a whole section within section 16 that talks about program income. And I'm not going to pretend to be an expert on that because that is definitely outside of our area jurisdiction. But I can point you to that section 16 that talks more about that. And I believe those receipts actually go in as a reimbursement against a program income expense account code of all places. So those are a little unique. So that's the first thing to get off the top first. Is it related to a grant or sponsored project? If so, then let's go this route. But if not, which is the case most of the time it's usually not related to a grant, then we can move on to the next step. Sorry, I keep hitting the wrong button. Okay, now step 2, so we got to have the grant sponsored projects behind us. The next step is to figure out, is this a university event or is this simply an external event that we are hosting just for the year or so? So once again, I think I gave some examples earlier, but once again, this really is a key to determine. So the characteristics of a university event, let's talk about those for a minute. This isn't everything all-inclusive, but if you think about these 5 characteristics, it'll get you pretty close to determining, yay or nay, is this a university event or not? So first off, university events typically are owned and operated, obviously, by us, the University of Illinois system. It's publicized and organized as this university revenue-generated event, such as the website, for example. If you're advertising the event on a website, you could, chances are it'd be on a University of Illinois website. If you're putting ads in a paper or flyers around campus, if you said, host, University of Illinois College of XYZ event, those are samples of things that, if you're advertising as a university event, then maybe it is our event. Once again, all revenues, all incoming receipts for registration fees, sponsorships, donations, anything of that nature, those revenues would all belong to us and not some external party. Like, we don't have to deliver that revenue to some external party once the event's over. Or we don't have to pass that money on to the next institution or the next university that's hosting next year's conference. The revenue for our events is our revenue and we keep it. And the same thing with expenses. All expenses for those type of events, for university events, are expenses. They would need to go through the university's procurement guidelines. They would have to follow all policies and procedures for allowability. They're on a university CFOP, all the revenues and expenses. So once again, they'd be on our financial statements too, obviously, right? And finally, the university would assume all risks related to the event. So if there is an accident at the event, our self-insurance plan would typically cover that. If there's a loss, if we don't bring enough attendees in and we lose money on the event, that's our responsibility to cover that deficit. We don't have some external party helping us cover that. So in contrast, here's some characteristics of simply an external event that maybe we were just hosting. So once again, it's owned and operated by some external party who's coming to us. It's their event, it's not ours. We're just helping out by hosting or maybe coordinating it. It's publicized and organized on behalf of that external party. So for example, if you go to the website for the attendees to register or whatever, typically it should be their external website. It should not be a University of Illinois website. Once again, all revenues and expenses would belong to the external party, not the university. And once again, since these are going to be in an agency fund, those revenues and expenses would not be on our audited financial statements. And then the external party would assume the risks related to the event, not the university. So if those events, if there's an accident or some kind of insurance claim, our self-insurance policy would not cover those events typically. You'd have to talk to risk management for final determination on that. But just to be safe, you just assume that we would not be covered. And the loss, responsibility for any kind of loss on that would be on the external party, not us. So if they have an agency fund and we run that into a deficit, we need to invoice that external party and they need to pay us back for anything that was lost, any money that was lost. So let's switch them back here. As you can tell here on the headings here, the blue headings will be for university events and the red headings will be for external events. So we're flipping back to the university events now. So if it is our event and we have things such as conference registration fees coming in, advertising revenue coming in, those would be university revenues and they would be recorded as revenue within a self-supporting fund, the funds that start with a 3. So ideally you'd have a unique self-supporting fund for each one of these types of events. But what you could do is if you have numerous events throughout the year, you could have one general self-supporting fund for all your revenue generated events, and then you could have unique program codes for the different conferences that do maybe take place. So for example, you could have 10 events a year, you could have one self-supporting fund with 10 different program codes. So that's another option as well. But the moral of the story here on this slide though is that is university revenue and it must be recorded in a university self-supporting fund. And then once again, at the end of that event, if there's any surplus or deficit, that's at the end of the event, that's ours to account for. And if there's a surplus, we would just factor that into the rates that we charge the attendees at the next event. And if there's a deficit, the same thing. Maybe we want to charge the attendees a little bit more the next time around to help cover the deficit from the previous event. And if you have any advertising revenue coming in, like if you have local restaurants that maybe want to advertise on your event brochures or things of that nature, I mean, that's fine. But that would come in as advertising revenue on your self-supporting fund, like a 307-910 revenue account code. And chances are that very well could create unrelated business income tax that you would have to report. And you could contact us and we could walk you through how that works. And once again, just some of the same typical self-supporting rules that you see on all self-supporting funds. Any expenses posted into that fund would need to directly relate to the revenue generation taking place within that fund. So, those expenses would have to be related to putting the conference on and to the benefits that the attendees would receive. And sometimes what you could see in these situations where maybe the cost, you break down, do the cost accounting and you figure out this conference is going to cost, maybe $55 a head, per person to attend. But you don't want to charge that much because you want to really get a good, robust crowd. So you decide to only charge $30 a head. So what you may do is go out and say, well, I'm going to generate some additional donations to help subsidize this activity. So I'll only charge $30 a head, but maybe I can get the other $25 a head from outside donations. So once again, in those cases, since this is a university revenue generated event, it's our activity, we can take donations for that and process those through the foundation as gifts. But then obviously you would have all those in a gift fund. So you would have part of the cost for the event over here in your self-supporting fund for the $30 a head. And then your gift fund over here that has those donations and sponsorships, qualified sponsorships. The remainder of your costs, which you do not build into the rate that you charge your customers, would be over here in the gift fund. And once again, you may probably have to have a unique banner gift fund and a foundation gift fund for these, especially if the donations come in with some kind of memo from the donor saying this is specifically for this, a donation for this event. But if you do get unrestricted donations that don't really specify that, there's a chance you could maybe throw it in one of your unrestricted gift funds that you currently have, but just be aware that you may actually have to set up a brand new gift fund. I think I already covered this aspect right here. Any gift revenue that would help cover those subsidized expenses, and any expenses you post there would need to be in line with how the donor, donated that in the memo that they provided with that gift. Another common thing we see are fundraising events where maybe you want to raise some money for scholarships for students within your unit, or whatever you need to raise more money for. So we'll see a lot of fundraising dinners where maybe with a $100 ticket to come to the fundraising dinner, the cost per head is maybe $25 a head, but you charge $100 to come. So we get questions like, well, we got a little bit of both here. We have something that feels like self-supporting, right? The $25 per head registration fee, but then they're paying $100, so there's a charitable portion in it. So how do we handle that? Long story short, after numerous conversations with the foundation on this topic, basically in those situations, all $100 would go to the foundation in those cases. Since it is a fundraising event, and the event in general is relating to generating additional donations to the university. But what they ask you to do is non-gift proceeds, and $75 is charitable gift proceeds. Then the foundation will process those, so forth, and they'll sweep those both to your related gift fund as gift and fundraising proceeds in two different revenue account codes. And it gets a little tricky and intricate, so I don't want to get into too many details now, but if you do have questions on how exactly that works, I can always walk you through that on the phone pretty easily. And I think I touched on this earlier, but just a reminder, regardless, for all these revenue generating events that are owned by the university, regardless if it's in your gift fund, your self-supporting fund, whatever, all expenses for these university events obviously must comply with all university policies and procedures, as well as the Illinois Procurement Code. Sorry, I think I actually just clicked on a link to policy there by mistake. So switching back over to, we're in the red now, the external revenue generating events that we maybe are simply hosting, if those belong to an outside party, as we already discussed, that actually needs to be in an agency fund. Those funds that start with a 9. So not a self-supporting fund, not a gift fund, but an agency fund. So any kind of registration fees that we maybe collect for those situations where we're, being a temporary host from the event attendees, or maybe any qualified sponsorships that these external parties receive for these events or donations, that would not go through the foundation. It would not go through the self-supporting fund. It would all go to this agency fund that you would have to have set up for the event. And then any expenses relating to that event itself would have to post to that agency fund as well, because once again, this is not our event. It's not the university's event. So if you're incurring expenses to put the event on, we do not want those on the audited financial statements of the university. We need those on that agency fund to match properly with the revenue that came in for it, to make sure they're properly excluded from the university's financial statements. So, once again, just a reminder what agency funds are. Those are the funds where we are simply acting as a custodian to hold the money on behalf of the external owner, but that money really within that agency fund and all the expenses within that agency fund belong to that external party. But the tricky part of it is, they say, fine, okay, it's not our money, but they still need to pay us. We're still being the custodian, right? They still need to write checks to us to come to the event. So who do we make the checks payable to? And I believe we actually have worked with Joe here, sitting in the front row, in the past on this question. And the advice that we've received is to actually have those made payable to the University of Illinois, since the money is going through a University of Illinois banking system and a bank, technically, right? Just to make that process easier to get the deposit in. But just because the University of Illinois is on the check does not mean it's our money necessarily. So I know that's tricky. It doesn't really feel right or sound right, but it's just one of those intricacies you have to keep in mind, just to make sure the deposit goes through cleanly. And once again, this last bullet, if it would be helpful on the memo line if those people who are paying actually put the name of the event on that memo line as well, so it's easier to tie it to the agency fund. And then in this modern day and age, a lot of people don't like paying with checks anymore. Some people just want to pay with credit cards, so they say, why, can we just have them pay with credit card instead into these agency funds? Once again, this is outside of our jurisdiction, but from my discussions with Mark Hinkle, this is typically not allowed. Merchant Card Services does not want to allow agency funds to utilize our university credit card terminals in most cases. There always could be exceptions, and I would defer you to talk to Mark and his group to look at your specific scenario, but typically the answer is no. And what most external parties do in those cases is they have their own external bank account. Maybe they set up a Square type of situation where they accept credit card payments, but then it'll go directly to their external bank account and just keep the Illinois agency fund out of it in those cases. And once again, as we touched on earlier, the Illinois self-insurance liability coverage does not apply to external parties and their external events when we're simply hosting them. So, if you have a close relationship with that external party, you may want to advise them of that and see if they will need to purchase any additional coverage to make sure they are properly covered in the case of an accident. And one other important point, too, that we run into a lot is sometimes, once again, the unit may have a close relationship with this external party. And they say, listen, we support what this external group's doing, and we want to give a little money to them, $500 or $1,000 to help support their event. So they'll say, oh, can I just do a JV just to throw $500 their way out of my expense account code? And the answer is no. So if this is an external support to an external party, you need to follow section 8.1.5 of the business financial policies and procedures to properly make that payment as a financial support payment through TEM. So when that check is then cut through TEM and the contract is signed and everything in this policy is followed, that check would then be deposited into that agency fund or into the external party's external bank account if they wish. But we just cannot do a straight JV to give financial support to them, to their agency fund. So once the event's all closed out and over, it's just important to make sure all the revenue is collected and recorded to the proper place, all the expenses are recorded and to the proper place, so you can see whether there's a net loss or a net profit. So once again, here's some links to different sections of policy if you do have an excess of money or a deficit and how you can help address that. And if this is a one-time thing and you really don't anticipate another revenue-generating event, it's best to go ahead and close everything out, get the funds zeroed out, and then email us at the UAS email address there to ask for that fund to be terminated. So that way it's not straggling out there, and we can get that closed down for you, and you don't have to worry about managing and reconciling that anymore. If it's an external event, if there's a surplus and it was a one-time event, typically you would want to return that excess money back to the owner. So there's a section of policy here that walks you through how to do that. And once again, that's a payment through TEM that you would make to cut that remaining balance out to the owner. And some cases, what we've seen is the external owner will say, listen, I'm not worried about it. You can just keep that money. We appreciate you helping us host the event. So in those cases, what you want to do is work with the foundation, and we'd actually have to have a check cut out of that agency fund and sent over to the foundation as a donation, because in essence what you have there is a donation from that external party, because they basically forewent their money and let us keep it. So in essence, that's really a donation from that external party. And then finally, if you get no advice or no information from the external party, then they're just gone. And those rare cases, what you'd have actually is unclaimed property at that point, which would unfortunately have to go through the unclaimed property process, which is quite an ordeal. So hopefully you don't run into that. But there are situations where maybe you do have a surplus and actually that relationship is going to continue. Like you actually want to host this external event for the external party for maybe 3-4 years in a row, or just on an ongoing basis with no end in sight. So in those cases, what you could do is just keep the money in the agency fund and have that there in there as a buffer for the external party's event that they may have the following year. Once again, if there's a deficit, though, if they did not collect enough money, we need to invoice them just like any other external party or customer. So we need to invoice them saying, listen, you have a $555 deficit. Please pay us by this due date. And they need to, per policy, they need to rectify that within 30 days and give us that money back within 30 days to clear that deficit. And finally, I do realize this is a kind of a tricky process, and there's a lot of ins and outs here and a lot of things to remember. So just always feel free to go to our Who to Ask list on these. If you do have any questions, you can go to the self-supporting section of our Who to Ask list or the agency fund section. or the gift fund section and talk to the subject matter experts in those areas, and we can help walk you through those specific issues. So I know I went through that fairly quickly. Is there any questions in the meantime? Right here.
So, any markup on an internal event would be instead of a gift. Have to go through the foundation. The whole process.
A markup on an internal.
So let's say you're hosting an internal event and you're actually charging more than the cost. That would be considered a markup, and that would be considered a gift. So that whole transaction would go through the foundation now. You need to get it on
No. And you have to remember too, just to comply with self-supporting funds, you really shouldn't be charging much of a markup. I mean, if you want to charge a little bit of a markup just to make sure you have enough working capital in there to cover your expenses, that may be one thing. I'm sorry. The question, which actually was it was a very good question, was let's say you've done the cost accounting of your university revenue generated event, figure out it's going to be $25 a head. So you say, I don't want to cut it too close. I'm going to charge $30 a head just to, keep myself safe and make sure I don't have a deficit. So in those cases, if it's a small markup like that, I think you could make the argument. It's like, listen, we did the best we could in our cost accounting. We're not exactly sure of the costs. We're going to do a small markup just to make sure we cover all of our expenses properly. And self-supporting funds are allowed to have a working capital balance in them, a couple months of working capital. So an example like that, I wouldn't be too concerned about it, and I think that would just be all straight self-supporting revenue. And also in that kind of example, most of the times those are not fundraising events. There's no charitable nature to the event. It's maybe just an academic conference and you're charging people to come, right? It's not a fundraising type of activity. So that would all belong in a self-supporting fund, and I think you'd be safe keeping the full $30 in there. And if you have a little excess there at the end, then so be it. You can just maybe factor that into next year's conference, build that into the rate, or if it's a one-time event, maybe just that ends up getting lapsed to the income fund. However, on the flip side, if you are having a, or on that same example too, you don't want to or charge too much. If you say, well, it's going to be $25 a head, but I want to cover myself and charge $50 a head, that could be a little excessive. So you want to be careful about that.
That really turns it into a fundraising event.
Yeah, so on the flip side, if you have more of a fundraising event where you say, listen, this is a fundraising dinner, we know exactly what we're doing here, we need to raise money for scholarships, we're short, you're marketing that to your attendees, you're saying, listen, this is the purpose of the event, we need money for scholarships, please come and help support us, and it's a $100 ticket. And usually it's being clear to the attendees what's going on, it's being clear to them that there is a donation piece in their registration fee. Those are the cases where it would go through the foundation because there's a charitable intent behind the whole event itself. Does that help a little bit? Okay, that's a great question though, thank you. All right, I'm sorry, I went too long. We'll go ahead and shut this off, but thanks again.
Thanks, John, and if you have questions, please feel free to reach out to him, but I want to keep us closer on time as I can. Next up is Shauna Claiborne, and I think she has some guests to introduce us to.
Good afternoon, everyone. My name is Shauna Claiborne. I'm with the Office of Procurement Diversity, and as Gloria mentioned, I have two vendors today to introduce you to. These are small, diverse vendors that the university encouraged you to use. So first we have Sterling Medical. Sterling Medical is a minority-owned firm that sells medical supplies and equipment, and we have three gentlemen today representing that can give you a snapshot of what they do.
Hello, everybody. My name is Robert Gutierrez with Sterling Medical Group. Sterling itself has been in business for 30 years, but as an MBE company, which is a minority business enterprise, we've had the business certified for the last year and a half. Also, we're certified under the state of Illinois under Central Management Systems and under the NMSDC, which is the National Minority Supplier Development Council. So we provide trays and kits, surgical supplies, and of different items. So I'm going to have Mr. Patel tell you about our company. Thank you.
So before, I kind of go through the slides, I want to see, who kind of procures medical supply, lab supplies, anything related to medical. It could be as simple as gloves. No one. Oh, few. One. Okay. 2, 3. Okay. All right. So I'm not going to spend a whole lot of time. I know you guys have a lot more other important things, coming up in the next, few minutes here. But like Bob said, we've been around for 30 years. We're in an FDA approved facility. What that means is, we take components. Ryan here is kind of going to show you some of the products that we kind of, manufacture, where we put together. So a lot of these items are for your hospitals, right? So we put surgical kits. We, put together. We could put like 80 different items in one package and sterilize, so when the physician or the surgeon walks in a surgery center, he has everything that he needs, to do the surgery, right? And we just do one single scissor. We'll sterilize that, so if somebody wants to use it, they have one sterile scissor. We have done crazy things like, we'll do cotton balls, 3 cotton balls, and we'll sterilize those, right? So we do, since we're small, we're nimble, whatever the university, one of the requests we got recently was nursing, for nursing students, right? So we developed a kit, with a big bag. We put in everything a nursing student would need to go through, their, 2 years of nursing school, right? Every product that they might need is in this one bag, and they just, carry around that bag when they go through their rotations and stuff, right? Like I said, surgical packs, we have fast turnaround times. We do a lot more than, just the surgical packs. Like I said, if you need gloves, if you need any lab supplies, if you need anything related to medical field, we can, get that, for you. Some of the vendors that we partner up with, so we make some of these kits and put their name on it, and then they turn around and sell it to, you guys, right? So what we're trying to do is, how can we cut out the middle people, and then how can we sell directly to you guys, right? We can work with them too and sell it to you, but who wants to pay the extra dollars, right? So anything that you guys need, we're gonna be out there after you guys done with your meetings. If you want to stop by, we'd really love to connect with you, see how we can kind of take the next steps, right? And kind of, find your department, what those are, and kind of, Ryan or me can kind of follow, and Bob, we can follow up with you guys. Any questions? Oops. No? Okay.
Thank you. Are these some of the kits that you have out here? What do you have out here?
Yeah, some of the kids.
Some of the kits? Okay. So if you want to, after the meeting, then if you want to take a look at some of the kits and have questions, they'll be here to answer any questions. Thank you. All right, our next vendor, I think this just turned off, so I'm turning it back on. Our next vendor we have is a KRS 102 firm. Do we need a passcode? Sorry, it just turned off. No. Did you push anything when you were up here, or it just went off? It just went off, okay. Okay. So we've mentioned KRS 102 vendors before, our IT consulting contract that many of you are aware of. So today we brought in one of our vendors from that contract, Aika Poonam Gupta. She is the owner of Aika. I can't remember what it stands for, but she will tell you a little bit about her firm. And I think last time we kind of polled the audience again, like how many of you are familiar with the contract, KRS 102? And we saw a few hands last time. Hopefully there's a few more of you. But yeah, one of our roles is to really just encourage and push this contract because it has over 22 vendors on it. So before you go looking for any other IT vendor, we recommend starting with these vendors here.
Sorry,
It's slow.
what's going on here?
Okay.
Well, the ladies are just getting things started. My name is Poonam, and I really appreciate your time. I'm a little bit under weather, so if you can't hear me, tell me. So just raise your hand. I will speak up a little bit.
Okay, so
It went on.
oh, thank you. Here you go.
So while, yeah, just open my presentation, please. You have my presentation, right? I do. Yeah. So as Shauna said, ICA
Use the mic
stands for IYKA. Oh, sorry. But let her finish now. It stands for Integrating Your Knowledge Assets. It started in 2000 with the crazy idea of mine that the time that technology was just getting more and more complicated, and I was driven to simplify it. So with that, I'll just start wherever the presentation comes up. So we have been in business since 2000, worked with the state, local, and federal agencies, and have, just because our processes and the innovative technologies, we have built about 22 products in big data, rather all kinds of data, AI products, middleware solutions, and many solutions, and that has perfected our way of doing the professional services. That the KRS 102 that Shauna mentioned is basically a master contract of University of Illinois Systems that covers all the 3 campuses, that has negotiated terms and conditions, so you can really, just get the resources or support that you're needing much, much quicker than any other procurement processes. So our company has won the KRS 102, and I'll tell you almost all the categories, 5 categories that we have won. That's not me. That's yeah. Okay. There you go. Thank you, dear. Thank you. So sorry for a bit of a technology hiccup. And so that's just a bit of my background. Don't try to read it. It's too much of a jargon that marketing people just put up. All it's saying is that coming from analytical side of the chemistry to the analytical side of technology, and have created many products and services and won the many recognitions in innovative data scientists, best practices, business leadership, change agent. We have done many of those things. ICA, as I said, started in 2000. We are in Chicagoland, Washington, D.C., and in India. We have served a lot of customers by now. It's a very round-up number, but the greater pride is that our Dun & Bradstreet past performance year-on-year is 98 plus, and almost 78% are repeat customers. Almost all our contracts are on time and within budget, so that's what you'd like to probably hear then. We have gone over that. We have been certified by different agencies, including State of Illinois BEP certification. So when we work with universities like yours, we not only bring ourselves, we bring the OEM partners that we have a formal relationship, whether it's a CDW, Oracle, or Microsoft. So we have not only the certified people from these OEMs around us, but we also have the capability, in-house capability, to support your project. And in addition to these OEMs, we have 4 joint ventures that are approved by Small Business Administration. That's a federal agency, as you know. And I'm actually a founder of 2 of the not-for-profits. What it means to you is that when you have a project that is needing extended expertise or extended resources, I will touch upon some of the stress points that the clients came up and how we solved it. So that's, that's what brings the value of these partnerships that we have in place. Some of our customers and master contracts, almost all of these are actually master contracts that actually covers state, local, and federal, including the University of Illinois systems. And in the University of Illinois systems, that's what I was sharing, is that we have won 5 categories. I think there were 6 or 7, which means almost all of that. What KRS 102 stands for basically is professional services, meaning staffing, as well as projects. So we were given 8 minutes to talk to you, so I had to limit my ability to share, but I will throw in a few things that we do much beyond that, and what value that we bring to each of these categories, whether it's application development, teaching and training, help desk services, infrastructure services, or customer support. Again, the same categories, we have spread it in different customers that we have served. You can kind of quickly scan through it, fairly repeated, and that also covers all our Dun & Bradstreet of almost a perfect track record of over 19 years. I would like to just give an example. I highlighted this. RTA is Regional Transportation Authority. What it means when we are talking to a company that is small and nimble, but at the same time processes are so robust, we have adopted very process-driven Baldrige system in our company and use the technologies like managed hubs, that every process is documented, everything is standard operating procedures, and everybody is connected to that. And what that means is when it comes to stress, how that is dealt with. And I'll take the example of RTA, Regional Transportation Authority. A few years back, we were doing a small contract for them, and on the network side, and something went wrong, and it was like 5:30, and I started to go home and get a call, we have a problem, do you have any senior person that you can send? And I said, well, it's after hour, Friday evening, it was Thursday evening, I guess. And what happened? So I called one of the managers. He said, okay, let me go and check what happens. So he went thinking that maybe a couple of hours things, and once he got there, and that was not our project. We were working on something else, but the relations that we built and the the comfort that we gave, they are asking that, hey, do you have anybody? And lo and behold, we found out by 7 p.m. that it's irreparable. That means the next day the trains won't run. I had to send 2 resources at that hour that worked till 2 a.m. without knowing whether we will be paid for their services or we will have to bear the from our pocket. But that's when it comes to the customer service. That's how we have won so many accolades on that. Yes, the trains were running and we were able to do everything that needed to be done to have their system, all the ticketing systems and everything up and running. So there was a big break. So just things of that nature can come up in any situation. Not that every time it happens, but when you have the process in place, the stress time is taken care of, and when it's not a stress time, actually you can rely on a company who has been doing something good for a long time. So here we have 2 other examples. I won't bother reading about it, just to give you a glimpse of one. Is the first one on the left is Department of Health and Human Services. We have done 3 contracts so far. The 3rd one is running. 7 years and no complaints. All the past performance is excellent. And the total of all of that is about $4 million contracts, and it's still going. So not even one situation that failed us. The second is Jersey Telecom. Is the 2nd largest telecom company in the European Channel Island of Jersey. We have done a number of contracts, whether it's application development, teaching and learning. We became one go-to company, even though we are so tiny compared to this large organization, for how do we do that? Do you have somebody to fill this up? So that's the confidence that we can give. And just to summarize it all, our repeat customers gives us all the pride, is a lot of people that just want to use our services. Customer service, as I shared earlier, is top-notch because we have every process managed and documented and on the software platform. We have done 22 projects, and if I have one brief second, I want to share something. I saw a lot of you are from the accounting or finance or a lot of numbers, right? We have done a lot of products. One of our product is a data discovery-based product, which does not require any data preparation and reaches out to the different data sources. And I don't have the slide uploaded in here, but if anybody is interested, I'll be more than happy to share with you anybody you can contact. So whatever it takes you months and years to get this data ready and analyze, we do it through the data discovery platform that reaches out to the data sources live. So there's no preparation. When you add another data source, it's another couple of hours of setting up once and it's going. And then it's live. It's on all the platform that you can be. And you get the results immediately. So those kind of projects, we have quite a few of them right now, actually 5 of them, but that's the one I thought that would be good. So with that, I would like to thank you again, and I'm here, if she allows me, I am here to answer any questions, otherwise I'm sitting there. Any questions for now? Either I did an awesome job or I bored you enough. Thank you.
I want to thank our guests for being with us today, and please take advantage. I know that they're going to be staying around, so feel free to ask any questions. I apologize for pushing you through, and appreciate your time sensitivity. Next up, some updates from financial aid. Keely Fletcher.
Hi, good afternoon, everybody. My name is Keely Fletcher. I'm with the Office of Student Financial Aid and Scholarships here at UIC. So I'm going over today with you some of the changes, upcoming changes to our student billing and payment plan that will be in effect for fall of 2020. So just to kind of take you through what we currently do. So student bills are right now for this current year, they're due after our classes start. So for fall semester, our fall semester assessment went out to students who had registered on August 1st. The bill, however, was due on September 28th. So that about a month after our classes began was when students' bills were actually due. So failure to pay the bill will result in finance charges for that student if they owe a balance once that bill payment deadline has passed. And registration holds for future registration for any balance greater than $200 are typically placed on that student's account as well. That happens sometime typically around mid-October. So just to kind of give you an idea of our trends for financial holds, again, our holds are assessed in October of each fall semester. It prevents all registration activity for a student. So if a student has a financial hold on their account, they will not have the ability to register for future semesters, so for the spring semester in particular. So for fall of 2019, the initial hold population for UIC was 3,918 students. And Bill and Kathy, correct me if I'm wrong, I believe that was what, 12% of our population? Yep, 12% of our total student population. And for our first-time full-time students, so the students who just started with us in fall of 2019, that was 543 of those students received a hold, and that's out of a population of about 4,400 students. And this is kind of the breakdown. So 12% of our incoming student population also received a hold. So that's quite a number of students who started with us at UIC, but do not have an ability to continue because of finance charges. So we also looked at this in terms of current. So as of December 5th, that whole number went down. It went down, but not necessarily. We're not out of the woods yet, so to speak. So it went down to about 2,000. So about from the original of nearly 4,000 down to about 2,000. So progress was made from October all the way through to December. Progress was made, but not enough. And the average hold balance that these students hold is about $5,100. So these are significant charges. These are not small dollar charges that students owe us. They're quite large balances when you look at it on average, especially when you focus on our undergraduate population, which has the highest head count of students receiving holds. So when we look again in December for our incoming population, 327 students still have a hold for an average balance of nearly $4,900. That's 7% of our incoming class. So right there, that would be a 7% retention hit for the university. Our retention goal is 93%. There's 7% right there. So that does not include students who are not academically successful or who withdraw for other reasons. So obviously, if we maintain 7% of our incoming population on hold, we're not going to meet our retention goal. So in order for the university to retain students, we have processed a new payment methodology, if you will. So as opposed to students being, their bill being due after the start of classes, starting in fall of 2020, so this upcoming fall semester for the upcoming academic year, students will need to be paid in full or enrolled in a U of I payment plan and making payments before the first day of instruction. So we're moving from a post-enrollment billing methodology to a pre-enrollment billing methodology. So now students had till September 28th to kind of get their financial aid sorted out, figure out what they're going to do for you in the room. We also had until that time to get departmental payments processed and scholarships offering processed for students. Well, that's completely shifted. So now we don't have that much time. So for the fall and spring semester of 2020, the semester bill due date will be 7 days before the start of instruction, and I believe that is August 17th. So the student's bill will be due on August 17th, and if it is not paid in full, or if they are not paying on a U of I payment plan, financial penalties will accrue, and then there will also be a late registration charge for students who have not registered at that point. So if they register after the bill is due, new registration, so they kind of wait, say, oh, you know, I know I'm going to get a finance charge, so I'm just going to wait. I'm not going to register because I want to avoid that finance charge. Well, they're going to get a late registration fee. So that will occur, uh-oh, I think it just died again. While we're getting it fixed, any questions on this so far? Yes, sir. That is correct, only for undergraduates. Now, I will say the late registration fee, there is discussion of that applying to graduate and professional. But that has not been set yet. That is still up for discussion at this point. But the finance charge that will be assessed in fall of 20, the late fee, sorry, I keep calling it finance charge, Bill, bear with me. It's a late fee, will be affected only to the undergraduate population. Graduate students will receive their assessment just like undergraduates do. It's just their billing due date will not be 7 days before the start of the semester. Yes? Absolutely. Yeah, absolutely. We have a very detailed communication plan that we're working, my office as well as the Office of University Financial Services and Cashier Operations. There will not be just one communication on this. There will be a lot of communication on this in the sense that from Bill's team regarding the payment plan, when they can enroll in the payment plan, as well as the change to the billing due date. And for my office, and we haven't quite gotten to that yet, so spoiler alert here, we now have a new requirement that students who are receiving financial aid, if they have documents that they need to turn in, they have to provide that to us by August 1st to avoid that late fee. If they do not provide by October 1st and they're still relying on financial aid to cover that bill, they will be assessed that late charge. They will not be exempt from that cost. So my office, we will be communicating that information to students All currently enrolled students who are receiving financial aid will receive that. We're also going to send targeted communication via paper and email, because kind of going back in time, but a lot of students don't read email anymore. So we're going to actually send paper as well to explain that change in the deadline so that they're aware of waiting to the last minute could have a negative financial consequence this year, this upcoming year. And just to give you an idea, we receive kind of the highest spike in document processing the weekend before classes start. So again, this is going to be a behavior shift. But yes, we do have a detailed communication plan for how we're going to roll out these changes. Oh, you're fine. Okay, I hope I didn't break the microphone. Sorry, I'm just wrecking the place here. The laptop, let me just scroll ahead. Okay. So now, why it's important for us for that behavior shift for fall of 20 is because for fall of 21, so the next year, the next academic cycle, the penalty will not be a finance charge. The penalty for not having a zero balance and not being enrolled in a university payment plan is that courses will be canceled. So students' registration will be dropped. So it's a very negative consequence. So that's why we're hoping that by rolling out this change without having the ultimate penalty, which is course cancellation, behavior will shift such that students will be used to at least having a year or 2 semesters under their belt of paying 7 days before the start of the semester or making sure they're current on their university payment plan, that we will avoid potential enrollment issues with course cancellation in fall of 20. So now there are exemptions to this policy. We talked about one, which is graduate and professional students, and they will also be exempted from course cancellation as well in fall of 21. Student athletes will also be exempted from this just because of the timing and nature of NCAA funding. Students who have approved VA benefits, students who are children of employees or who have other types of tuition waivers, students who are identified as having tuition exempted with sponsored billing authorization, and including students who have a 529 plan such as College Illinois. So those right now are students who are exempted from this policy. So they will not be assessed a late charge. They will not be have their courses canceled in fall of 21. So again, the following populations will need to be maybe excluded. So again, undergraduates who receive financial aid if they have provided their materials to us by August 1st. So if a student is relying on their financial aid to cover their bill, which a good number of our students do, but a good number of our students also still need to provide materials to us. This year it's looking about 35% of our undergraduate students need to provide materials to secure financial aid for next year. So if they do not provide those by August 1st, they will not be exempted. A late fee will be assessed. Fall of 21, they will have their courses canceled if they're using financial aid to resolve their bill. UIC Global students are also going to be excluded, as well as international students with payments on Flywire. We do have a subset of students who attend orientation right before the beginning of the semester. They will also be excluded. And again, students who are on a U of I payment plan and making payments. Those students will be excluded from having late fee assessed and will also be excluded from course cancellation in fall of 21. Now we know that this is not yet an exhaustive list. We know that as we work through this process, and it is a process, there will be other students who we might want to add to this list. There are student populations we might remove from the list, but generally speaking, this is the current list of students who are exempted from this policy, both for fall of 20 and for fall of 21. So again, the key here is students have to be paid on time. And again, it's for, some of the reasons why we do this is why 7 days ahead of time is because if a student does get their course cancellation, we want to give them time before the start of school to get their bill resolved. Now 7 days isn't a lot of time, but the reason why we do that is financial aid is 10 days. So kind of we have a short timeline there. So we do give students 7 days to kind of get on a payment plan, make a payment, resolve their financial aid issues so that they can actually get back into class before the start of the semester. We don't want to do this after. We don't want to do this after add drop because that could negatively affect the student's ability to academically succeed if they are able to actually be in that semester. So the late payment fee will actually be replacing the finance charges that students currently receive. And also, students with a delinquent balance will not be allowed to register. So they will have a hold place in their account, and they will not be allowed to register, or their courses will be dropped. So again, this is just some more information on what will be occurring for fall of 21, that the ultimate penalty for these particular students will that they will be dropped. Now, they will have an opportunity to re-enroll. So just because their courses are canceled 7 days before the start of the semester does not mean they're completely out of the population. We will give that student time to re-enroll before they come back to school. However, they must be either paid in full, enrolled in a payment plan, or meet an exemption to re-enroll if their courses are dropped, for those courses to be reinstated. So students who have late registration after the payment due date will be assessed a late registration fee. Now again, this is the fee that will apply to undergrads, and it is questionable at this point if it will apply to graduate and professional students. There has been discussions at the provost level as to whether or not this fee will apply. We don't know just yet. So that's still kind of to be determined. But it is a possibility that this fee will also, the late registration charge will also apply to graduate professional students. So again, students must provide those materials to us by August 1st. For fall of 21, they also risk losing institutional grant funds through the UIC grant program if they fail to do so. So that's another penalty for fall of 21 that students who have failed to meet these terms and conditions will be subject to. And again, students with a delinquent balance will not be allowed to register. So there's still some items that we still need to determine. So we're still kind of working through the implementation phase. So the amount of the late fee charge, I'm not sure about what that's going to be just yet. Same with the late registration fee. Fee waiver requirements, if the fee can be waived. If it can be waived, who can waive it? Both registration fee and the late fee. Again, additional exclusion populations, and also the reinstatement process, the course cancellation and reinstatement process for fall of 21. We have a little bit of time on that, but not a lot of time to figure that piece out. So this is where I need your help. So the billing deadline isn't just changing for students, it's changing for us too. So right now, we receive in the financial aid office, and I know financial services receive in their office, pretty much throughout the course of August and September is when we receive the bulk of our departmental payments, as well as our foundation resources from colleges and from departments. Well, that timeline is not just changing for students, it's changing for us too. If a student is going to be receiving, if you plan to award a student departmental scholarship, no longer can we wait until the end of August or beginning of September to resolve that. Now that payment has to be applied to that student's account 7 days before the start of the semester. If not, for fall 21, for fall 20, the student will be subject to a late fee. Fall 21, their course registration will be canceled. So that's where the timeline shifting is really important, especially if you're planning to use university resources to assist your student population in enrolling or continuing at UIC. So we discussed this issue with the University Foundation, and the Foundation will be issuing preliminary allocations in each March of the upcoming year. I believe this is the current process, that you are already receiving those preliminary allocations. So the estimated allocations will be sent to the business managers to you in March of 2020. The fund distribution to accounts will still occur in mid-August. That they cannot fix. However, the University Foundation has approved deficit funding in these foundation accounts. So this way, by moving up the timeline, there's no funding deficit. So you will be potentially deficit funding if we pay this aid before that mid-August transfer occurs. But University Foundation, as long as it's reconciled by the end of the fiscal year, they're completely okay with it. So again, per the foundation, the preliminary allocations generally increase. The only time they decrease are for principal invasion funds, which I believe are rare and limited. And if you do that, I believe it's done by the folks in this room, by the business office managers. So if you have one of those funds and you're concerned about it, we can talk through it to see what makes sense in terms of allocating those resources to the student population for the fall semester, if that is how you intend to use those particular funds. So with that said, in terms of notification for all recipients, we need to know by June 30th the list of students that you have. So again, timeline's really moving up here. And why we need that is because we need that time to get all of these departmental awards. We get hundreds, probably somewhere in the thousands, departmental awards that we process in the financial aid office, as well as those that are being processed through University Financial Services. So we need those as soon as possible. We cannot guarantee that any list submitted towards the end of July will be processed on time to hit that August 17th deadline for the student. So if we do not get a list provided by July 24th, we risk, again, those late charges will be assessed to be determined who pays that late fee. Again, we don't have it set if this fee is going to be waivable. There is discussion that if the student late fee was assessed because a departmental payment was processed late, that the department would have to pay the late fee. So that's something to keep in mind. Again, there's also hold implications. If we push that hold to the student or push that finance charge to the student, if it's more than $200, they're not going to be able to register. So there's a lot of implications here when it comes to having these lists submitted in a much more expedient manner. And again, obviously for Follow 21, the ultimate issue would be that course registration cancellation, which is what we're trying to avoid. So again, communication plan. So this is kind of our communication plan in terms, as you can see, there's a lot on here in terms of how we plan to proceed with this. Again, we also will be working with external partners as well as campus partners. This is we've already discussed with the Advising Leadership Committee, the Committee of Associate and Academic Deans, Dean's Council, and now you guys, here are number 4 on the grand tour when it comes to this particular topic. So again, we also will be discussing the student affairs. We'll have a scholarship summit in January to also review some of these changes. For those of you who utilize SNAP to find your student populations, we will be refreshing SNAP with new award year data in late March to help assist with identifying students who might be eligible for Fall of 20. That's a change also from we normally do it in August, now we're going to do it in March, so that you'll have that new year refresh as well. And then also there'll be another enrollment managers meeting so we can discuss with the enrollment side of the house. This has been discussed with them before, but to explain the full ins and outs of the policy. Try to keep this quick, Gloria, I apologize. Questions? Thomas? So Thomas asked if the university is going to devote resources to assist. Is that a rhetorical question? Yeah. Yeah, so that's a very good question, and that is still to be determined, and as a matter of fact. To be honest, at this stage, we have not received any word that additional allocation or additional resources will be allocated to assist with expediting this processing, and we're still working with Budget and Finance to determine how those fees will be allocated when it comes to the late fee. So that's another; those are still to be determined. Any other questions? Okay, thanks everybody.
Okay, so now I have the tough decision. I'm going to beg the indulgence of my colleagues in USFSCO and ask you to come back next time for your session. I promise to make you first. Thank you. There you go. Larry, do you have a thumbnail? Something that's very important to tell us in 30 seconds?
No, I think we're good. We'll send out any communication.
Okay, so look for a communication coming from UPB. When you see them in your email, read them, please. Thank you all for coming. I hope you have a safe and restful and happy holiday and come back refreshed in the new year.